Okay, Jeff and Nikita, we are next going to get into the income section of this sheet. So as we like to do, Jeff, can you kind of just give us a quick rundown of what this means? And then Nikita and I will try and fill it out.
So the income tab is really used to report your income, or you'll enter your income on this tab, and we're only looking for you to enter categories of income. So the first section of the tab is really summarizing your vertical income or your earned income, and that is really the income you make from your job and your spouse's job. So we have three different jobs here where you can enter an income amount, and you're entering your annual income before any deductions, including before tax deductions or insurance deductions. So you just need to enter your annual income here. The second section to the income tab relates to your rental property income. So these are your investment properties where you rent them out and you have money coming back in. And we're really looking for you to enter your net rental income. And that means your rental income after your expenses, including your real estate taxes and insurance. So you would just need to summarize what your monthly rents are that you collect, less all of your monthly expenses. And we'll go through that in detail. And then finally, the last part that we would want you to enter on the income tab relates to any privately held business income, which includes if you're involved with flipping homes. And again, we would just want you to enter your net privately held income, or these are the small businesses that you or your spouse may have. So your net income is really your revenue less all of your expenses. We're just looking for that net amount on a monthly basis. So that is the income tab. We're just looking for those three categories of income on this tab here.
Thank you, Jeff. And if I was confused about any of it, which I'm not, but if I was, we're going to find out right now as Nikita and I go to fill out this sheet. Nikita, job one, what do you have?
Job one, 60,000.
Okay, and then is your spouse working as well?
Yep, 70,000.
Okay, and then do either of you have a part-time job or another source of income?
Yeah, he has a side job that roughly about 5,000 a year.
Okay, great. And then let's talk about rental properties. I think you have one rental property?
Yes.
Okay, great. So what is the total rent that you get on that a month?
$1,500 a month.
Okay, and then Jeff talked about expenses. So what did you have in expenses that we would have to take out of that?
We had a water heater that broke, and then some other miscellaneous kind of things. And then it was also vacant for like a month. So 3,000.
So 3,000 a year. So if we divide that by 12, that's $250. So the 1,500 is now down to $1,250. And then do you have anything else that we would be taking out for like taxes and insurance and that kind of stuff?
Yeah, about $250 a month.
Okay, so you got 1,500. We're taking $250 out for taxes and insurance, and then $250 out for expenses. So that gives us a net here of $1,000.
Yep.
Okay, great. Do you have any privately held businesses, or did you flip any properties this year?
No.
All right, awesome. Well, we are through the income section. I think we did a good job, Nikita. We're going to give ourselves a thumbs up. We're going to move on to our next tab here, which is going to be existing real estate. So, Jeff, can you walk us through what we're supposed to do on the existing real estate tab?
Yes, the existing real estate tab is pretty straightforward. You're really just listing the real estate that you currently own. And this tab has been divided up into two sections. We have the first section, which is really your non-investment real estate, or the real estate you use personally. So this would be your primary residence, which is where you live. It could be a second home or a vacation home that you do not rent out, but you use it personally. So you would enter that into that first section as well. And then the second section is really for your investment real estate, or the real estate that you rent out and you collect rents from, whether that is being rented out full-time 100% of the year, or only for vacation purposes sporadically throughout the year. You would still enter it in this section. And what we're looking for each property is really the address of the property, value of the home, and you can get the value by going to Zillow.com and just plugging in your address. It's going to give you an estimate value. We just want an estimate here. We also need to know what your current mortgage balance is and your current mortgage interest rate. You'll take that information, list it by property, and you do that for all of the properties that you own.
I just have one thing to add. Don't go to Zillow. Just ask How Real Estate and we'll help you out.
Okay, let's jump on in here, Nikita. So you have the primary residence, which is 123 Main Street, right?
Yep.
Okay, great. And what is that property worth?
315,
Okay, and what is your mortgage balance?
230.
So you're just looking at your last mortgage statement that you got in or pulling it up online and it's telling you that's what your balance is?
Yep.
Okay, and I see here that Jeff's nice spreadsheet calculated that you have $85,000 in equity in that property, so that's great. And then what is your interest rate?
We just refied with Mid-Penn Bank, so it is now 2.9.
2.9, love it. Okay, so what this is telling us, Nikita, is because you had filled out other information on the sheet, that you have 22.75 years left to pay that mortgage. So congratulations. All right.
Yep.
Now, do you have a home equity loan or a second mortgage against that property?
No.
Okay, great. Do you have a vacation home?
No.
Excellent. Okay. And you do have your investment property, which happens to be 125 Main Street?
Yes.
All right. Excellent. And what is that property worth?
200.
Okay. And what's your mortgage balance on that?
178.
Okay. And do you know what your interest rate is?
So I think that's like 3.125.
Okay. So that says that you have roughly a 30-year mortgage on that. So for us making this up, that's pretty damn good. That is excellent work. Okay. So this sheet is now filled out. And it shows you got kind of $200,000 in value here plus 315, so roughly 515,000 in mortgages. About what is that? $408,000 in debt, and a little over $107,000 in equity in those properties. Right? That's what this shows us. You are doing good, Avatar Nikita. All right. Now we are going to get into our favorite part, which is where we do the assumptions. Because the assumptions are going to drive everything to tell us where we're going and where our journey is taking us. So, Jeff, if you could take us through the assumption sheet.
Yeah, so the assumption tab is our driver of the spreadsheet. And there's various categories of assumptions we have in here. And it's really going to be calculating or driving all of your income and calculating what that is going to be into the future along with your net worth. So there are a lot of assumptions that have been pre-filled out, and we believe these assumptions that are plugged in this spreadsheet are fairly accurate and can be used by most people, but I still think you should read through this section and fill it out to the best of your knowledge. There is sections that you're definitely going to have to fill out. So the first section relating to general assumptions talks about the number of years until retirement. That's going to be different for everybody, so you're going to want to plug that in. The next section summarizes your income growth, which includes growth on your job income as well as interest rates on some of your investments. So you should read through that. The expense assumptions talks about or creates an assumption for your expense growth. So how much are your expenses going to go up each year, along with some tax calculations. So if you're a high income earner, you should adjust the rate to a more reasonable level. And then the final categories we have here are your asset appreciation. So if you just buy an asset and hold it, what are your assumptions on the growth for those assets each year? And then another section relates to debt assumptions, which you really are plugging in your interest rates on your other debt devices. Since we've already entered the real estate, it's really on all of that other debt you have. And then finally, the best part of this tab is really how you want to invest your available cash flow. And we provided 5 different areas you can invest in. And depending on how you want to make those investments, you're going to have different growth on each of those different categories. So that's really the fun with the spreadsheet, is you can enter different percentages in each of these sections and really see how it changes not only your income, but your net worth. So that is a high level summary of this assumption tab.
So thank you very much, Jeff. And I am super excited to get into this and actually play with the numbers down the bottom and start to show everybody kind of what a difference those things make. Okay, Jeff, thank you for that explanation. The next thing we're going to do is get into going over this sheet with Nikita. Now, as a homeowner and somebody that owns real estate, you always got to adapt. So Nikita right now has repairs going on her house. So what we're going to do is I'm going to ask her questions about these assumptions, and she's going to give me a thumbs up as I go in to fill them out. So Nikita, I have the general assumption is that you would retire in 25 years, but you're an overachiever. So I'm going to assume you want to retire in 20 years. How's that sound? All right, thumbs up, good. Okay, next assumption that we're going to make. How much do we assume your income is going to go up year over year? Again, you're a high achiever. I'm going to put you a little above the 3% at 5. How's that sound? Okay, excellent. All right, next. Well, actually, I'm going to move you to 4. I'm going to say 5 for you and 3 for Jeff for an average of 4. And then what I'm going to do here is next on your rental income. Generally, rental income goes up about 3% a year, so I'm going to leave that as 3%. Is that okay? I'm going to take that as a yes, that you're okay with 3% there. Privately held companies, in this particular case, you don't have any there or any flip income, so if I put it in a 0, it's not going to make any difference because you don't have anything in there. Same thing with interest rates on notes receivable. You don't have anybody that you lend money to that owes you money back. So we could leave it at 5%. We could make it 0. It doesn't matter. I'll leave Jeff's normal assumption of 5% in there just in case that ever became something that you did. Interest rates on savings, money market CDs, we have in 1%. Are you okay with that? Okay, interest rate earned on stocks, bonds, and mutual funds. Now, Jeff has in 5%. You know, we could be a little more aggressive with that if you're a little younger and say 6 to 8%. We could kind of do whatever you want here with this number. And this is a spot where you've got to make your own decision on kind of how your portfolio is going. Jeff has 5% in there. I'm going to leave 5% in there. But again, you can make those changes when we get down to assumptions. We might come back in and change that just to see what happens. Interest rates on other investments, which is life insurance, that kind of stuff. 4% seems like a reasonable number. We're going to leave that in if you're okay with that. Interest earned on retirement income. So that's your 401ks and that kind of stuff. So that's in at 5% as well. We'll leave that there for right now. Now the next one is company match. So what percentage of your income does your company match if you have a match on your 401k? So I'm assuming, Nikita, that you work for the Howe Group. We're going to put you in at 3%, which is they max 100% of what you put in up to 3%. And then we're going to say that Steve's company that he works for is not as good and they don't match anything. So that's what we're putting in. Now we're going to get into your expense assumptions. So generally, if your income is going up 3 or 4% and your expenses are going up 3 or 4%, you're probably in pretty good shape because your income is more than your expenses. So you'll start to see a trend where you actually have more money to invest that way. So unless you have something major coming up, I'm going to leave this in at 3%, which is basically a rate of inflation. Is that okay? Payroll tax for self-employed people is 7.625. I'm not changing that for anybody because Jeff is an accountant. He says that's the right number. Now that's only going to come in if you're self-employed. So if you're not self-employed, you don't have to worry about that. Is that right, Jeff, or am I wrong?
Well, that also calculates on the earned income. So when you enter your job income, you're entering your gross amount before taxes. So that does come into play on that as well.
Okay. So just don't mess with this number is what you're saying.
Don't mess with that number. Exactly.
Okay. And then your income tax rate, like Jeff said, we put 25% in here. There's an easy way. Just type in income tax rates and it'll pull it up by income and you can figure out what to put in here. For purposes of what we're doing today, we're going to leave that 25% in there. Asset appreciation. So annual appreciation on non-investment real estate. So this is your primary residence or a second home. Do we want to assume it's going to go up more than 3%? We know that Nikita is a great realtor and great realtors find good real estate that's going to increase a little bit more. So we're going to make it 4% for you.
Like that. We're good.
All right, you're back. I love
I'm back.
All right.
My house is coming up in value as we speak. It's
There
great.
we go. Okay. Annual appreciation on your investment real estate. So that investment property you own, do you expect that to go up more than 3% or less? Or
I think we can keep it at 3%.
okay, great. You don't have any privately held companies right now, so we have 3% in here, but again, we make it 0, it's not going to make a difference in this particular case. Annual appreciation on vehicles and personal items. So generally, unless you have a car that you've had for, that's a classic car, they're generally going down in value. So Jeff had 0 in here. Are you okay with leaving that at 0?
I don't think a Nissan Rogue is gonna, yeah, we're good.
Okay. This is Avatar Nikita. Avatar Nikita could have
Right.
a Rolls Royce. She could have whatever she wants.
I don't have that, so we're good.
Okay. All right.
I do have a question though about this sheet real quick. So when we get the sheet though, it comes blank. Do you give a suggestion on the side of what numbers should be, Jeff?
So the sheet will come pre-filled out with all of the numbers that are in here already. So all of these interest rates are going to be, and growth rates are going to be pre-filled, and we're doing right now, we're just going through and adjusting them if necessary. A lot of them we're just leaving where they are. So yep, it's going to be pre-filled for you.
Gotcha. Okay.
All right. So do you have any student loan debt that we talked about?
Yes.
Okay. Do you know what your interest rate is on your student loan debt?
6.5.
Okay. Other loans that are not credit card loans or your vehicle. So this would be if you had any type of other loan, you're saying no to that. So again, if you don't have any debt in there and it shows 4%, it's not going to calculate anything. Me, I just like to put 0 in for stuff I don't have anything for, but that's just me. Interest rate on your credit cards. So you pay your credit card off monthly, but this is a situation where if you did have debt that stayed on that credit card, you would want this interest rate in. So you would look at your credit card statement and see what that generally shows as your interest rate. But they're generally in the 18 to 20% range. So if it has 20% there, we'll leave that in there. And then your car loan, what's your interest rate on your car loan?
3.75.
All right, now this is the most fun part, right? So I'm just going to show you one thing real quick. I'm going to move from this sheet back to your net worth sheet. And this tells us, to your one sheet. And this tells us that you basically have $15,000 left over to invest because it's coming in here. It calculated the income that you put in, calculated the expenses that we went over, calculated the taxes that you had, and came up with you had $140,000 in income. You had $112,000 in expenses, including taxes. You put $12,675 into your retirement accounts, so that's really good. You have roughly $15,000 left over to invest. So now what we're going to do on this assumption tab is we're going to decide what are you doing with that $15,000.